Sabha has cleared the revised income tax bill. In a big relief for partnership firms and family offices, the new bill drops the controversial alternative minimum tax proposal. Most recommendations from the select parliamentary panel have been included in this latest draft. Let's go across to my colleague Shimi for more details. Shimi, what are the key changes that are proposed in the new bill?
Aligning the applicability of alternate minimum tax for limited liability partnership with the existing provision, removing the expanded scope that would have included those partnership firms, even though they are not claiming any kind of tax benefit or deduction. The move is a huge relief for those partnership firm family offices, as earlier draft actually expanded the scope of those, making them pay 18.5% of capital gains. Now, another crucial amendment is with respect to the income tax refunds. Now, the original draft, which was introduced on February 13, included a provision saying that refunds were not allowed if returns were filed on or before the date. Now, the clause has now completely been omitted, restoring that refunds even for belated returns, a move that is clearly coming as a big relief to taxpayers. Another key change is related to transfer pricing provision. While the definition of associated enterprises remains unchanged, certain section language and structure have been simplified to help interpretation and reduce a lot of dispute related to that area. Now, meanwhile, government has also responded to feedback on the initial draft. Notably, it has decided against the select committee recommendation on the part of beneficial provision on the carry forward losses, so that was not accepted. Now, besides, the new bill aimed to align tax laws with new pension reforms, international investment agreements, and procedural clarifications addressing several key areas that were point of discussion in the earlier draft. So, for example, it has introduced a separate taxation amendment extending benefit available to sovereign wealth funds to Saudi Arabia Public Investment Fund and its wholly owned subsidiaries. So according to tax experts, most amendment actually focus on the language simplification to avoid earlier confusion, and there has been no change in the tax rate or rebates in the final version of income tax bill.
Right. Thank you so much for taking us through those key proposed changes of the new income tax bill. But the Finance Ministry, viewers, is expecting reciprocal tariffs from the US to impact 55% of India's exports to the US. In its response to the tariffs levied by America, the ministry said that the exporters may face cost pressure and added that the Commerce Department is actively engaging with exporters and the industry. Shimi is back to tell us more on the Finance Ministry's reply. Shimi, over to you.
Well, quite a crucial one, as for the first time, Finance Ministry has acknowledged in the Parliament that 55% of India's export to the United States are now expected to face reciprocal tariff following the recent US trade, tariff strikes. So the US has imposed differential reciprocal tariff rates across its trading partner, including India's merchandise export, particularly in the key sectors, and now they're expected to be significantly affected. Now, officials also note that the impact will differ depending on the product type, global demand trends, and the level of differentiation Indian goods offer. Factors like contractual terms and product quality will also play a key role in determining how resilient Indian exports remain. Now, the Department of Commerce is actively engaging with exporters and all industry stakeholders. The consultations are underway to assess the real-time challenges across sectors and the way it's evolving. Now, the government also emphasized the fact that it prioritizes the welfare of farmers, entrepreneurs, exporters, MSMEs, and reiterated its commitment to protect national interests. Now, it also added that all necessary steps will be taken to mitigate trade risk and safeguard India's position in the global markets.
Right, Shimi, thank you so much for that.